Let me know how this looks. Can anyone confirm that this looks okay?
Looks okay.
Perfect. Thanks, Gary. Yeah, Max, can you hear us okay? Test 1, 2, 3. Perfect. Cannot hear you, Dino. All good.
Hello?
Much better.
It was my. Seems like it was my aux wasn't properly put in. All right, sorry for
You
that, guys.
must have thought we were just not interested in anything you were saying.
Yeah, I was like, seems interesting. Nobody is paying any sort of mind to what I'm saying. All right, I think we're good. We're live on both YouTube and Twitch, so we can get this train going. All right, so everyone joining us already, hello and welcome to another edition of This Week in Crypto. If this is your first time here, which for some of you might be, this is a weekly panel call where the Santiment team and community members gather around and discuss recent crypto market events. But we do this from a more fundamental data driven perspective. So over the next maybe 30 to 45 minutes, we are going to be talking about a number of different insights that we have discovered about the crypto market using our own metrics and indicators in the past week. So if you have never used Santiment before, I strongly suggest checking out app.santiment.net. The link is going to be in the description of this video. Over the last 3 years, we've developed hundreds of different tools and custom metrics for understanding the behavior of the crypto market participants. And we have built all of our metrics around three main sources of information. This is on-chain activity, social media information, and development activity information. And we are going to be featuring some of our templates, metrics, and indicators over the next half an hour to 45 minutes. And then afterwards, we are going to be taking questions from the audience, guys. So already, if you know that there is a coin or a market event that you would like us to cover from a fundamental perspective, if you are, I know a lot of people are looking into buying the dip at this point in time. If you are thinking about maybe pulling the trigger on a certain coin and you are interested in some impromptu on-chain and social analysis about where a coin is at this particular moment, let us know in the chat and we will get to it at the end of the stream. We are going to try and leave a little bit more room for audience questions this time around, because the last couple of streams we were only able to get to like 2 or 3 coins. So I really want us to, if there's enough obviously demand, I really want us to cover more coins than that this time around. Finally, I suggest checking out sentiment.net in the description of this video, and also joining our Discord, which the link to is also going to be in the description of this video. So if you don't want to wait until next week to join us and talk to us about the crypto market, we talk about this stuff pretty much every day in our trading channels, and they're getting more and more active with a lot of people sharing their opinions and thoughts on the market. I see a lot of people making some nice profits, sometimes using our own metrics, sometimes just bragging about it in our trading channels. But in general, our trading channels are pretty active, and we tend to share some of our insights pretty much on a daily basis there as well. And then before we get the ball rolling finally, please do, if you like this type of content and if you would want us to make more of it, it makes a big difference if you guys like, share, and subscribe to this YouTube channel, because it tells YouTube that our content is good and that it should promote it a bit more so that we can grow our community as well. So without any further ado, I'm gonna give it up to Brian, who is already sharing his screen, and he can get us on the road. Brian, the floor is yours.
Awesome, much appreciated, Dino. Welcome everyone. As usual, I'm going to kick things off with a quick price return chart update and just go over a few assets that have been standing out. Overall, we have a slight drop in the overall top 100 in terms of both average and median. We had a drop of about 4.2 in average and 3.7 in median. Mostly we had the bottom 50 assets really struggle here, whereas Bitcoin, only a 2% drop, which is typically the case on negative weeks. Bitcoin will be hurt the least. It's part of why overall it tends to do historically some of the very best. Obviously, in shorter or midterm windows, there are better assets, but this is a good demonstration of why Bitcoin kind of has its sustainability in the marketplace over time. When things do go down, Bitcoin tends to be sort of just in the least amount of pain here. But as you can see, we had a few standouts: Celsius 37. This was Ampleforth, Loopring, Ontology, Wire and Finance, which has just been, as many of you know, going nuts for the last few months, as well as Wi-Fi with two eyes. And then Binance Coin also had a nice week. On the 30-day, kind of a mostly flat at this point, because we've had so much ups, medium ups and medium downs at this point, that it's kind of evened out. Overall, though, we're still at about an average of 28% for these top 100 over the past 30 days, but you wouldn't think so based on the current sentiment. So it's funny how the markets really work. And then on the 90-day, we're actually still at a 90% average. And by the way, you can see that I'm highlighting Polkadot. That's because we changed over to CoinGecko's market cap ranks recently. So for those who were wondering why Polkadot wasn't in it before, you can rest assured that we'll now have it consistently in the top 100 as long as CoinGecko does. So that's pretty much it for the top 100 market caps. We're going to keep this segment brief, and I'm going to go right into volume now. And this is pretty interesting. So many of you may have seen this chart referenced in the tweet that we put out yesterday. We've also been kind of using this model as a rough way of looking at what Bitcoin and Ethereum are doing versus DeFi. And we're using 5 projects: Ren, Lend, Kyber Network, 0x, and Chainlink, to give it a just sort of small sample size of what some of the popular DeFi altcoins are doing right now. And clearly, the trading volume has really transferred over to these popular coins, especially Ren and Lend, where we're getting a 1,345% increase and 2,820% increase respectively. Pretty nuts there. On a month-on-month, it's still, I mean, this Ren and Lend here have been putting up just monthly highs month after month for probably about 4 or 5 months now, in terms of just increasing trading volume. And Ren especially, as many of you know, it kind of had a pretty big surge about 3 to 5 days ago, and it's kind of retraced a little since, but expect the volatility to continue for these two coins, and I'll go into a little more about them momentarily. Now, moving over to Bitcoin, Ethereum, we wanted to take a quick focus on daily active addresses for the two and kind of compare what they're both doing. Overall, as many of you know, and we've referenced this often, the best and most predictable way to see prices move up over time is through address activity and to an extent token circulation as well. But in this case, we're looking at address activity and it's showing us that Bitcoin has kind of flattened out a little bit between the noise. If I can just highlight this and get it a little more focused. So you can see that, right around early August, it kind of peaked. We had this day of about 1.13 million daily active addresses, and that was about as high as it got. And even though the price ended up going higher about 2 weeks after this, it kind of showed the daily active addresses really showed where the price was going to go. And we were already kind of in overinflated territory here. And I'll show you this on the DAA divergence model in a second. But we were overinflated here, and when things started to fade, that kind of foreshadowed that this kind of drop was going to come. This red line here being Bitcoin's price, and everything just got weird. Give me one moment. There we go. So yeah, that foreshadowed this drop. And then for Ethereum, it was even more of a shocking drop because of the fact that we really had a big move down here, whereas price, which is sort of dark right now, you can sort of see it a little there. I should have made it a little lighter, but you can see price kind of ignored what DAA was doing here, and it actually tried to hit 500 um, at the beginning of September, which eventually, had to collapse because the address activity just wasn't there. So in short, Bitcoin is looking kind of stable at this point, whereas Ethereum still has some concerns, to be honest. I'm not seeing the activity required for us to bounce right back up above 400. It could happen, but if it does happen, it will probably again show super overinflated signals on this model here. So we're looking at Bitcoin first. What it's showing, let me make it just a tad smaller so we can see it all. Bitcoin basically had its big red stretch for a little over a month here when it got up to 12K and sort of hovered around the high 11Ks, mid 11Ks. And eventually that had to drop off because the address activity, based on history, this is using 4 years of data. So it's a pretty big sample size to give us the most accurate readings. Based on history, it had to drop eventually because of all of these red signals going on. And now, after it has, we're actually back in slightly bullish territory. You can ignore this date for now because Bitcoin is the one asset right now where we're getting a bit of a delay on current readings. I talked to the devs about this. So every other graph you look at on this model, this current day should be pretty accurate. But on this particular one for Bitcoin, got to try to ignore what's going on with the very last day. Because it sort of rises throughout the day and it doesn't give an accurate projection for now. But based on the last 8 days or so, it looks like, yeah, 8 days, we've had a couple that have been in the top 50% in bullishness and mostly just slightly in the bullish territory. So obviously we've been ranging in this sort of 9,900 to 10.3K range over the last week. Um, if this model predicts things correctly the majority of the time, which I feel it does, we have a higher chance of moving up than down in the near future. And if we do move down, you'll just see these bars getting bigger and bigger because of the fact that daily active addresses have mostly kind of held pretty steady. They're not falling off the way Ethereum's were, right? So if we go back here, look for these bars to either grow or flatten out. And it's going to depend on which direction price goes next. And if it does go next, this should be telling us that it's going to be a bigger buy opportunity and a even more high likelihood of a big bounce at some point. Moving over to Ethereum, as I mentioned, lots and lots of red. And this current day, as I said, is an accurate projection. And we're getting about the same amount of low DAA that we've had the previous couple days. This red, it's been going on for about a month now, a little over. And Ethereum, obviously, being a long term asset that our team believes in and most of the crypto community believes in, This doesn't necessarily mean it's a bad asset. It doesn't mean that this is going to just cause the price to tumble all the way down to back in the 200s, 250 range. But it does mean that as of now, it is desperately needing more address activity to sustain its 350-ish, 360-ish range that it's in right now. Um, and unless that changes, if Bitcoin were to drop, we'll see a much larger drop for Ethereum, almost certainly. And obviously, it's going to take a lot of ERC20s along with it. But speaking of ERC20s, if we go to this compare feature, I'm not going to show this model now because it looks like it hasn't loaded them all. But I did prepare 4 assets that had major daily active address uh, increases. ELF is one that was trending on our top 10 emerging trends list, which we now call sand trends, yesterday after it peaked at something like a plus 120%. Might have even been a little higher. If one of you want to write in the chat exactly what it was, I'd be interested myself. But obviously, it launched to the moon here based on a huge amount of address activity. I don't quite know the fundamental reason, but as we can see,
It's because they went into DeFi. Very very
yep,
simple.
there you go.
They announced some sort of a DeFi related initiative, and just like that, it pumped about, I think, of 150 or something. It already lost about 70% since, I
It
think.
did.
Right, which is to be expected. It seems to have been like, if you compare a bunch of ELF metrics I did earlier today, exchange inflow spiked like crazy, age consumed spiked like crazy. Basically, everything was pointing to the fact that a lot of people were waiting for the price of ELF to do anything so that they can just get the heck out of this coin for the time being, and they did.
Mm-hmm.
Therefore, it was in no way surprising to see a very quick correction. But just so you know, yeah, it's just because they like many other coins are trying to pivot into DeFi, and it seems to have worked for them, at least for a very short term.
Yeah, thanks, Dino, for that explanation. And it makes perfect sense. I mean, we've seen so many coins sort of announce their initiative to get into DeFi, and immediately we see this kind of impact. It's rare where it goes a 2x in a single day, but in the case of ELF, that's exactly what happened. And it sounds like a lot of people were trying to exit after being sort of stuck in that coin for a long time, and that just propelled the price even higher temporarily. But I wanted to point out it's interesting because even after market close, since it's been about 14 hours uh, since yesterday's market close, I've seen an even higher projected daily active address projection. And yeah, I actually do have ELFs loaded. So I want to show really quick the fact that, okay, we were actually earlier in the day, about an hour ago when I loaded this, we were actually projected to have an even higher bullish divergence. Now it's about even between the 2 days, but it's telling me that there's actually some sustainability and there probably will be a bounce at some point. It most likely won't be near, where it topped out yesterday. But because it's still getting so many DAA and it's not just an isolated one where it immediately falls back, typically it shows that there's still going to be some pretty high volatility. And if you're, kind of a gambling person and you want to really try to time the bounces and use things like social volume, you could probably time a bounce correctly. And right now it's already doing some sort of shift. It doesn't necessarily mean it's going to, jump right back up, but we'll at least see a little bit of dancing around here um, that, for you people who chase volatility might want to focus on. And then I wanted to show some other assets that have been pumping this past week. Ren obviously was one of them. It's one that was kind of hit pretty hard over the correction from last week, and it dropped over half its value. It actually was at 58-ish cents and got all the way down to 28-ish, 25, excuse me. So yeah, it was like a 60% drop or so. And DAA actually stayed pretty high here though. And we were already, like, even in this territory, we were in pretty bullish divergence territory. And the fact that it dropped this much and DAA, still had candles like this, it basically allowed the price to kind of make a bit of a comeback. Obviously, with Bitcoin not being able to bounce beyond the 10.3K level right now, it's limiting the amount of of uh, altcoin surging that can happen because Bitcoin keeps having these mini drops that are taking altcoins with it. But I still see pretty bullish divergences here. And you can just look over time, like the long term over the past 6 months, clear just massive amounts of increase in address activity. And I think it's very important to keep tabs on what's going on with Ren here. In addition, we had Lend, which is even more so. I mean, we had a pretty decent bounce a couple days ago, and it looks like it's making an attempt now to get back to these local tops it saw the last couple days. And lastly, synthetics, kind of the same deal. And it's actually kind of had the most success with the bounce, and it has gotten a higher high based on the local top from yesterday. So these are just four ERC20s that I think are very interesting. Actually, that was only the third. Yeah, no, I did get all four. My mistake. So yeah, those four I think are interesting to watch. Keep a very close eye on DAA. All four of them have been showing bullish divergences on my model, and unless we start seeing a big drop off, I think that bounces can continue there. Last
Hey,
thing I
Brian.
wanted to touch, yeah,
Sorry, yeah, while we're on the topic on Bitcoin and Ethereum, I'm wondering if your NVT model is working, just so we
it
can
is.
see. Okay, I'm curious what it's saying for both of the top cap assets, because I was looking at it, I think, yesterday for Ethereum, and I think it was pretty green.
Yes.
Now this is, yeah, this can be due to, yeah, there you go. Can be due to a bunch of factors, but in general, I think Ethereum's transaction volume. So for those unfamiliar with what this model does, it's kind of very similar in concept to price DAA divergence, where in this model you take the amount of on-chain transaction volume of a coin, and then you divide that by the, or you divide the market cap of a coin by the on-chain transaction volume. And so what this model is trying to say is that if the amount of on-chain activity is very high compared to the price, then the model is bullish. If it's very low compared to the price, then it's very bearish. So at the moment, this model is saying, look, Ethereum's on-chain activity in terms of just the amount of coins being moved on the network is very high compared to its price action. So therefore, it's kind of showing a green bar for the time being. Is that right?
Yeah, that's exactly right. And just to correct, it's token circulation, so
Mm-hmm.
slightly different from transaction volume, where transaction volume takes all trades going on chain, whereas token circulation only focuses on individual tokens, and they can only be counted once per day. So it's actually more similar to DAA in the respect where it's only one per day that can be counted instead of like wash trading sort of skewing data and giving us some false information. And then we
Mm-hmm.
use these trend lines here, a 6 week, 11 week, 16 week, and then all time for what the NVT is for Ethereum or any other asset. And if it's below all four, you get bullish. Below three of the four, you get semi-bullish, so on and so forth. And if it's above all four, like it was here, that's when you get red. So it uses trend lines to adjust over time, because if you look back at Bitcoin here, you'll see that the bars tend to get higher and higher. And if we just left it without trend lines, all of these would just be red and all of these would be green, right? Because over time it grows and you need to have an adjustment for recency. And this basically allows it to see what's happening based on inflating supplies and inflating entries into the market as far as more tokens, more addresses, etc. And on Bitcoin here, it's sort of telling an opposite story where on the DAA, we're getting a very slightly bullish signal. Token circulation, not so much. Token circulation, we're on our fourth straight month currently, and we're right at the trend line. So like on one good day, like if today ends with high token circulation, we could drop all the way into like neutral or even like semi bullish territory. On a bad day though, it'll stay red. But this tells me we're kind of lacking in the token circulation, and it probably had something to do with the correction that we saw last week, where there just isn't quite enough individual tokens being moved from wallet to wallet to propel Bitcoin forward. So this is very interesting to look at, especially the fact that Ethereum is inverse to its DAA, where the
Yeah,
address
I think this
activity.
is due to a few factors. By the way, Max reminded me that we should full screen our charts when we present it. I think
F11, right?
yeah, I
Yep.
think so. There we go. So just as a caveat to this, I think the reason why we're seeing this massive spike in Ethereum's transaction volume, and we can show it on a few other charts, but the idea is that, uh, it's DeFi. It's people using Ethereum for in various DeFi protocols, lending platforms, yield farming protocols. It's not Ethereum being used necessarily, the same way that it was used before. And there's a lot of people just over leveraging themselves with Ethereum in these DeFi projects. So it's something to keep in mind when looking at Ethereum's on-chain transaction volume and token circulation over the past couple of months. Is that the reason why you're seeing these increasingly green bars for Ethereum, pointing to the fact that, while its price is kind of doing its own thing, its transaction volume or just general volume on chain is exploding. It's because of DeFi in particular. So just keep that in mind. And so, if you're trusting this model, basically what you're saying is you're trusting that DeFi is not a bubble, and that you're basically putting your trust in the performance of all of the underlying platforms and protocols that are currently kind of growing in community's popularity over the past couple of months. So something just to keep in mind.
Yeah, that's well said, Dino. So obviously there's a lot of projects that go into what's going on with Ethereum's token circulation at any time. All right, the last thing I wanted to touch on really quick was Ethereum's top address. Now this one was quite interesting to a lot of you, and it got some pretty good reception on Twitter when we posted about it. Um, we had we basically saw the top address in Ethereum go from 2.12 million tokens in mid late July to where it is now of 6.39. So that's over a 3x increase in tokens in about what is that, a month and a half or so. Um, pretty interesting to see, especially because this is the top address. Um, we see kind of a smaller trend if we look at like the top 10, and an even smaller trend if we look at the top 100. But with the very top address that has the most sway in what's happening for an asset, this is something to keep an eye on in terms of uh, where the price will go, and the confidence that the people with the most at stake at any given time have about this asset. And it's promising. I mean, when you see a 3x in tokens being moved off exchanges, that basically is them saying, we're comfortable with holding, letting the price play out, and not messing with, you know, too much uh, volume on exchanges at any given time. We're going to let things do its thing. And we think that eventually things are going to work out in our favor. You can also see the percent of supply here, which 6 months ago around Black Thursday was at 13.3% of the total market held by this non-exchange address. Now it's at 17.99. So roughly 4.7% ish increase in the supply held by just this non-exchange address. That's massive. That is a huge increase when you're talking about a market cap as large as Ethereum's, the number 2 market cap rank on the in the entire crypto industry. So something to keep in mind there. I would definitely keep an eye on this, and it keeps increasing right now. At any given time, if it starts to drop off, that might be them moving stuff to exchanges and starting to take profit in some respect. So that's all from me, Dino. I'm going to send it back to you, and I'll probably follow up at the end when we answer questions about certain assets.
Good stuff, my friend. Thank you a lot. Let me start sharing my screen just to tag along on what Brian just said as far as the performance of Ethereum's whales. Another interesting chart to keep an eye on. So let me zoom in or full screen my view. All right, so this is the collective balance of the top 100 addresses holding Ethereum. These are non-exchange addresses, whereas you can also look at the performance of exchange addresses and you can kind of see a drop off since the correction, which is also kind of good. Now, if we compare it, actually, let me look at price in green and then non-exchange balance. There we go. So yeah, you can also see here that the top 100 Ethereum holders have also continued to accumulate into the drop, which is good. If we are only looking at the behavior of large non-exchange addresses for a specific coin, basically meaning the biggest whales for a particular asset, the fact that they are bucking the trend and not really succumbing to pressure, there seems to be a small like mini capitulation here. But since then they seem to have kind of reverted back, bought the dip, and are now accumulating once again. Good. Obviously, not all of Ethereum's on-chain analytics are currently showing super bullish signals or anything like that. I think we're still kind of in the indecisiveness territory, but the fact that its uh, biggest whales are remaining confident for the time being, I think is something to keep an eye on and something to look forward to. Now, I'm going to talk about two different things here for about 10 minutes, but in the meantime, guys, like I said, I saw a few questions or a few suggestions for the coins that we want to cover after our demonstration here, which we will. If you have any other coins that you would like us to talk about after I'm finished talking, any sort of coins that you think might have a good bounce back potential or are due for an even stronger correction, let us know and we'll do some very quick sort of on-chain and social analysis at the end of the stream. All right. So the title of this video is Signs of Buying the Dip in On-Chain Data. It's kind of backpacking or tagging along on the article that I wrote a few days ago, where I said that there seems to be clues as to a concerted effort by certain stablecoin groups to buy the dip after the September 2nd crash. Now, what am I referring to here exactly? You can read the entire article on insights.santiment.net, but I can also show that to you live on our platform. So I'm gonna start with Tether, obviously the most liquid and the biggest stable coin by market cap. And one of the things that I personally like to look at a lot when I'm trying to figure out where Bitcoin and by proxy the entire market is going to go is I like to look at the relationship between the exchange or the flow of stable coins to exchanges and the price of Bitcoin. Because in my mind at least, the idea is that if there is a strong uptick in the amount of stable coins being moved to exchanges, the premise at least is that there is an elevated amount of buy pressure, that people are on average looking to exchange their stable coins for more volatile cryptocurrencies. So I have looked at the exchange data for a number of different stable coins after the dip. So let's start with Tether, the biggest stable coin on the market, and let's look at its exchange inflow immediately after the dip. And so we can see this is about a month view, and we can see this major string of spikes in Tether's exchange inflow. And this, I think, is the 1 hour interval. Maybe if I zoom in, or sorry, out zoom it to a 1 day interval, I can show exactly how much this is. This is over a billion Tether being moved to centralized exchanges and decentralized exchanges in a single day on September 4th, as Bitcoin was bottoming out. So the brown is the price of Bitcoin, and then the purple is the amount of Tether being moved to exchanges. So if we assume that the primary purpose of people moving coins, or especially stable coins, to exchanges is to exchange them for more volatile cryptocurrencies, then this ought to be a relatively optimistic signal for the market bounce back. Now, there are definitely opposing forces, which I can go into in a little bit, as to the other side, the sell side pressure, which is also increasing. But for now, I think it's at least optimistic for the short term price action to see that a number of the largest stable coins are increasing their holdings or their supply on exchanges, which suggests elevated buying pressure. We can also look at Binance Coin, which actually had a massive string of spikes even more recently over the past couple of days. There have been a few big spikes in exchange inflow for BUSD immediately after the drop, but then after like a consolidation period of, or basically a period of a few days where nothing was really happening, we've also once again seen a major string of spikes pointing to elevated buy pressure, specifically using Binance's coin. Now, if we look at USDC, which is the second biggest coin by market cap, we can also see several prongs that are coinciding with local Bitcoin bottoms here on September 5th, as well as here on September 7th. So it seems like one of the reasons I think why we haven't been able, so to speak, to go below 10K is the fact that once we approach it, like let me just show you the prices here. So the one was here at basically it's at just at the 10K border, and then the second spike was here at the 10K border. So the two times that we saw Bitcoin teasing or coming to the support level, we saw a massive spike in USDC's inflow to exchanges, pointing to a lot of elevated buy pressure. And then finally, we can look at the DAI as well. And once again, even though DAI is mainly or primarily a decentralized exchange darling, this particular metric is looking at the exchange inflow of DAI across all exchanges, both centralized and decentralized. And you can definitely see a string of spikes immediately after the drop. So what does this mean? Well, I think on a short-term scale, it's definitely a sign that some stablecoin holders and specifically some stablecoin whales were looking to cash in on the dump and buy the dip. So I mentioned this in my article here, is that not only have we seen these spikes in exchange inflow, we have also seen coinciding declines in the amount of stablecoins being held by large addresses. So for example, here we're looking at addresses that are holding in orange, addresses that are holding between 100,000 and 1 million tether. We see this major drop of basically about, I think this is about 100 million USDT being moved away from these wallets between September 2nd and September 5th, so immediately after the correction, pointing to the fact that this has been a concerted effort by certain large stablecoin groups and stablecoin addresses to offload some of their stable coins, move them to exchanges, and probably or possibly exchange them for more for more volatile cryptocurrencies. All right, so this is something to keep in mind. Now, I wouldn't say that this like necessarily means that we are in for a bounce back in by any stretch of imagination, but I will definitely say that we have seen a similar pattern occur back in April of 2020, where, let me show you here. So after the Black Thursday crash, we saw a lot of people flooding into stable coins. And so one of the things that I mentioned right after the Black Thursday dump is I wrote sorry, I wrote that I would keep an eye on the behavior of stablecoin holders. And if we see whales and retail holders start to offload their stablecoin bags, and especially if there's a corresponding spike in the inflow of stablecoins to exchanges, this might suggest growing confidence among investors in a market-wide recovery. So that finally happened in April. And pretty much 2 days later, we saw a coinciding spike, a 10% gain in Bitcoin's price. I can show you this on the charts as well. Let me show USDC last year exchange inflow. Yeah. So this is what I'm talking about, end of April, where we saw obviously now the reason why we see so much more exchange inflow in general sort of activity with the stable coins is because of the DeFi space in general. But if we zoom out a bit, yeah, there we go. So we can see here sort of the first the first wave of buying the dip immediately after the Black Thursday dump, and then here we saw another like once market was kind of moving upward but was still struggling, we saw as Bitcoin was retesting the 7K level, we saw another major spike in the exchange inflow for USDC and a number of other coins which coincided with a large breakout. So in the past, we have seen the relationship between exchange metrics for stablecoins on the one hand and price of Bitcoin, and as a result, the entire crypto market be have a very interesting, correlation. So this is something that I would keep in mind in days to come. I don't think I think if we see a similar pattern occur like the last time we've seen it, so basically we see this first wave of buying the dip, which is the same thing that has happened this time around, and then there's going to probably be a lull period, which I think is already happening now over the past couple of days, where the stable coins are normalizing their exchanged values, and there's not a whole lot of more stable coins moving to exchanges. And then once we see this sort of second wave of buying the dip, it can point to renewed confidence in the short term as well as mid-term market potential. And this is something that I would keep an eye out on. So you can read the entire article here for more information, but in general, I think there are definitely signs of buying the dip in stablecoin data. However, it's not obviously the only thing that we should take a look that we should use to understand the market. Because, for example, if we look at Bitcoin and we look at Bitcoin's own exchange inflow, you can see the opposing force. Let me show you the last 3 months view. Yeah, there we go. So first of all, exchange inflow for Bitcoin just points to the amount of Bitcoin being moved to exchanges over time. So we can see here spike right around September 4th, once again, pointing to a capitulation among some Bitcoin investors, which thought that we are going to dump way below 10K. And then once again today, we are seeing another big spike in the amount of Bitcoin being moved to exchanges. So as there is a buy pressure on the one hand, there's definitely seems to be a relatively strong sell pressure or sell side pressure on the other hand, where some Bitcoin holders seem to be moving their bags to exchanges, which, in terms of stablecoins might be a positive signal. In terms of Bitcoin and Ethereum, why would you be sending those coins to exchanges unless you're looking to sell them for, other and possibly more stable cryptocurrencies? So this is one relationship that I wanted to highlight today. And the second one, just a tease of what we are publishing now every week on our platform. And this whole report is available to all Sandbase Pro subscribers. We're publishing deep dive into the market every week in our Sentiment Weekly report. One of the points here that I want to highlight today is this one, where we took a look at the amount of sell side pressure after the correction. So basically, we wanted to look at which coins were moved to exchanges the most after the dump. So let's say, for example, here. So between September 2nd and September 5th, basically in this period where everything on the market was tanking, which coins had the most increase in their supply on exchanges, pointing to the fact that their holders and speculators were looking to offload their bags and basically had no faith and loyalty to their coins. So the result was these 10 assets. So some of these assets are stable coins, as you can see here, Binance Coin, as well as Paxos, as well as Ample. But other are just DeFi related coins like Wi-Fi, REN, TRB, and YFL. So these are some of the coins that have been dumped the most on exchanges in the 72 hours after the correction. But we also wanted to know, all right, what are the least dumped coins or the most withdrawn coins from exchanges within the same 72 hours, pointing to the fact that the holders of these assets were not at all interested in selling their coins during the correction, even though the price was tanking and they were recording sometimes even double digit losses. They were very loyal to their particular coins. And we can see here a number of different assets, including, for example, Band. And I can show you that on our charts here. So if you look at Band protocol, and if you look its supply on exchanges, there you go. Since the drop, even though the correction has been very unkind to Band, which went from $15 to the low of $7 here, the amount of Band on exchanges has continued to decline. So people were actually withdrawing their Band from exchanges rather than moving in order to sell. So once we had a list of top 10 coins that were the most dumped on exchanges on the one hand, and the coins that were the most withdrawn from exchanges on the other, we wanted to compare the performance of these two assets over the last 7 days. And sure enough, I have a watch list that I created, two watch lists, one for the dumpers, there we go, and one for the holders or hodlers. So if you look at the performance of the most dumped coins over the last 7 days, their total market cap is down by 15%. So negative 15% over the last week. This is excluding stable coins, obviously. So all of the coins that were the most dumped on exchanges are down 15% in total over the last 7 days, while the coins that were most held or have been withdrawn from exchanges the most are up 9% and were yesterday up like 11% over the past 7 days. So I think this is something that we harp on in our insights quite a lot. Is the fact that when you see a reduction in sell side pressure, like we saw, for example, for band, and let me show you that again here. When you see this lack of interest to sell a particular coin, come on, band, exchanges, coin supply on exchanges, and then here we go. And so when you see this sort of decline in the amount of interest to sell a specific coin, it usually points to a reduction in sell side pressure. And given the fact that there are now less band being available on exchanges to trade, assuming that the demand for band is unchanged, the price is likely sometimes to inflate as a result. And this is what we've been seeing with band over the last 7 days. Obviously, because of the drop, its increase doesn't look all that impressive when we look at the last month or so, but it is still up quite a significant margin compared to other assets on the market. And just for more context, if we look at all assets and the performance of the entire crypto market over the last 7 days, they're kind of breaking even. So this is a very interesting story here, where you see the coins that were most dumped, that the holders were least sort of loyal to and confident about their short-term market performance, they performed way worse than the rest of the market. And then the coins that the holders were not only not selling, but actually withdrawing from exchanges, pointing to the fact that they were fine with hodling them for the time being, perform better than the entire crypto market. So something to keep in mind, and a way that you can use our metrics to find interesting entry and exit opportunities as they developed. All right. So given the fact that we are now about 45 minutes into our talk, let's go to questions. So any specific coins that we had questions for? Can you take a look at ETH? I think we definitely, I think, covered ETH in quite a bit of detail today. We can do a bit more if needed, but let's see if there are coins that people want to look at. AST. All right. AST. Air swap. So let me see if we have the on-chain data for it. We should, because it is an ERC20 coin. Let me change my layout here to a new template. Okay, AST. So air swap, right? Let me zoom in a bit. Obviously, a pretty big dip, as with everything else. Let's start with AirSwap's exchange metrics, and let's see what the amount of sell pressure has been, exhibited on AirSwap over the last couple of weeks. So obviously, something to be expected here. We saw a few massive spikes in AirSwap's exchange inflow here and then here as well, pointing to the fact that people were looking to, well, basically capitulating as the air swap and the entire market started to tank. Now, the good news is that over the past couple of days, we've seen this trend pretty much dissipate. So if you look at the supply of the coin on exchanges, oh, okay. Are we able to look at it? Seems like it's lagging a bit. Let me see. Okay. There we go. So let's see the supply of air swap on exchanges since the drop off here. So since the decline, we've actually seen a drop off in the supply of air swap on exchanges, which is good. Once again, good signal that you're seeing a reduction in sell side pressure, right? So as the air swap has started to recover back to, what is this, 0.15, I think. Yeah, pretty strong support resistance level here. We saw another spike in the amount of air swap being moved to exchanges, coinciding with another correction. So after pretty much a week and a half of just a reduction in sell side pressure, coinciding with finally a recovery for AST and a bunch of other coins, once again we are seeing a sort of a bump in the amount of air swap being moved to exchanges, coinciding with a short-term correction. Now let's see in general what air swaps on-chain activity is looking like. Let me zoom out a bit for further context. Okay, so obviously we've seen a pretty big decline here since early August. It peaked pretty much at the peak of its price, 0.3, and then since then we've kind of just been trending downwards. Now, the last day saw a spike in 158 daily active addresses, but I would assume that this is mostly speculators. So if we look at daily active deposits, yeah, we see the same thing. So basically, let me show you daily. So daily active deposits are addresses that are used to funnel AirSwap to exchanges. So we see a spike in these addresses going from 868 to 44 today. Basically pointing to the fact that a lot of people or a lot of addresses are moving AirSwap to exchanges compared to what they used to do over the last couple of days and weeks. And so this spike in daily active addresses is probably at least a little bit inflated by this spike in daily active deposits. Overall, Dory, its network activity like isn't bad. Of course, it has declined quite a bit since its all-time high here, but the fact that it's still on a good day containing more than 100 daily active addresses per 100 addresses per day that are interacting with the network is pretty good. Like I was looking at our filters yesterday, and out of the 1,600 coins that we currently have on our platform, there's only about 150 different assets that have more than 100 daily addresses active per day in the last month. So on average, coins that have more than 100 daily active addresses are very scarce. So the fact that AirSwap is still on a good day, being able to acquire these levels of on-chain activity is good. I would hope if we are really looking for sort of a midterm to short to long-term bounce back, I will definitely hope to see once again an increase in its on-chain activity. I think that if we really want to see a sustained rally, we're going to need to see something closer to what we saw at the beginning of August. Let's see the amount of transaction volume on AirSwap as well. Once again, we have declined, and here today we are seeing another spike in AirSwap's transaction volume. Again, I think this is highly inflated by the fact that a lot of people are moving their coins to exchanges, therefore a spike in transaction volume. In general, I would want to see something similar to what we see in the beginning of August, where the network was actually utilized, and there seems to have been both utilitarian and speculative interest in a coin. Um, Finally, let's look at the average profit or loss margins for AirSwap holders. So the MVRV is an on-chain metrics that measures the average profit or loss of a specific group of holders. So the 30-day MVRV basically tracks the average profit or loss of all of the addresses that acquired AirSwap over the last 30 days. So for example, here at the 17th August peak, the 30-day MVRV was 1.7, pointing to the fact that the short-term AST holders were about 70% up on their initial investment. Now, why is this important? Well, as a rule of thumb, the higher the MVRV gets, the more sell pressure there is, because people are, their bags are getting heavier and heavier. Their margins are growing, their profit margins are growing, and so there's more incentive to sell and take some profits. The lower the MVRV gets, especially as we go into negative values, meaning that people are in pain and they're actually down on their initial investment, in those cases, there's not a whole lot of sell incentive, right? Because you're not even breaking even. So what you want to definitely see is these very low MVRV levels if you're looking for good entry opportunities. So at the moment, we've seen AirSwap dump all the way to 0.5 MVRV. So basically, the short-term holders were about minus 50% on their initial investment, which is obviously to be expected when you see the performance of AirSwap in the past month. Let's zoom out a bit so we can see historical levels of MVRV as well, because this is also very important to see in the past what were the sort of bottoms for the short-term MVRV. So we can see that the MVRV has bottomed out at about 0.47, 0.5, 0.47, 0.5. So between 50 and 60%, when the short-term holders were between 50 and 60% at a loss, we usually saw the bottoming for AirSwap. We saw a bottom here, saw a bottom here, a bottom here, and then obviously once again a bottom here. Now, since then, it seems like we have rebounded a little bit, where AirSwap short-term holders are now about 0.68, so about 30% down on their initial investment. So still good. I mean, not good for them, but good if you're looking for entry opportunities, because according to the MVRV ratio, AirSwap is currently undervalued. But again, I think it could drop a little bit. I would consider maybe entering if it dropped a little bit further. Obviously, not in financial advice in any sort of way, but the fact that it's still underwater is good if we're looking for, if we believe in AirSwap as a coin. The fact that it's currently undervalued, according to MVRV, is solid. Now, the long-term MVRV is also important. So now let's look at what the average profit or loss of long-term AirSwap holders is. So here at the top, the 365-day MVRV was 2.95. So basically about 200% was the average profit margins of long-term AirSwap holders. It has dipped all the way below break even here to about minus 5%, but now we are once again above break even. So the long-term holders are about 20% up on their initial investment, which points to the fact that, there could be some additional sell pressure, because there's still reason for them to, if they don't believe in AirSwap's short-term price action, there's still reason for them to sell some additional bags of theirs because they're still in profit. Let's look at just historical levels of long-term MVRV to see bottoms and peaks. So we see here it peaked at 2.95, so about 300%. This was the biggest sort of profit margin for AST holders since the all-time high in 2018. And then as far as bottoming out is concerned, we could have gone way lower. So we went to minus 90% in 2018, minus 80% in 2020. Seems like this time, we kind of rebounded at minus 5%, minus 10%, which is good. But once again, I would like us to be way, way lower in terms of the average loss of both long and short-term holders, so that there's not a whole lot of incentive to sell. There's not a lot of sell pressure being applied to AirSwap, which could provide, given or assuming strong fundamentals, could provide a possibility or a potential to rally further. Okay. That's as far as AirSwap's concerned. Brian, do you want to take another one? Do we have other questions for or requests for coins that people want us to cover?
Yeah, we've got synthetics, we've got fetch. I can take synthetic. I could try taking both and see what I can find.
Sure. Do you want to? I'll stop presenting and you can take over.
Cool. All right. Fair warning, I think I've got a low headphone battery right now, so if I do cut out, I'll
no worries.
take over.
I'll take over.
All right. Synthetics. So we already went over the daily active addresses here. I also wanted to show you guys network growth, which is essentially the amount of new addresses that are being created on a daily basis. Why is it not showing up here? Network value. Maybe we don't have network growth for it. That's okay.
Yeah, it could be that there's a few metrics for synthetics that we're still lacking in Sandbase.
Yeah, that's okay. It's a fairly new asset, so it totally makes sense. 30-day MVRV. So this is one I really like to use a lot. I'm going to get rid of DAA here for a minute. So 30-day MVRV is essentially the average return of the 30-day holder when they first started investing, including things like FOMO and FUD along the way, and basically just shows where their profit is compared to where the price is. And as you can see, right around here, a lot of people miss the boat in terms of this big run up to 732. we still had the average trader of the 30-day span at about plus 39% at this point. You can see it over here. And it'll basically say anything over 1 is the amount of percent over it. So 1.39 equals plus 39%. Right here, when it dropped, we basically got down to the negatives. So this was 0.98, meaning they were at about negative 2%. 0.985 means negative 1.5%. And then the big drop recently on the 5th got us all the way down to negative 25% returns. And the rule of thumb for MVRV, whether we're talking about 30 days or 10 years or 1 day, is it's always going to hover around 0% because crypto is a zero-sum game, just like any other asset or industry that you're trading in. You'll have an equal amount of winners and losers. And right now, it looks like we're right at about even, so plus 2%, which essentially means that the price can go either way and it won't really be impacted by what other traders have done. But psychologically speaking, when you see it down here, like it was just a few days ago, we had the average trader at negative 27%. And that's an almost certain sign that there's going to be some sort of uplift in the price, or at least a correction that allows people to get closer to even, because we rarely see MVRVs this low. So this is something to look at for synthetics and a lot of the newer ERC20s that we only have like a year or 2 or 3 of data on. Typically just 1 year or 2 would be really good to have MVRV at your disposal. If we go to 1 year instead, you can see that it's actually quite a bit better because people who got in way back here were able to basically cash in and really capitalize on the massive run up that we had for synthetics when it got up almost to an average trader return of 281%, which is pretty insane. Obviously, with the correction, which we were anticipating for synthetics and a lot of other altcoins, we got a little bit of a ways back, but look, people are still 2x'd. Yeah, over 2x'd here, which tells me that we are probably still a little overinflated, and it doesn't necessarily mean the price has to drop, but it does mean that people are going to profit take incorrectly in order to have us eventually get back to 0%. And if we're a betting, we're betting people and we're making trades ourselves, which we aren't giving investment advice to you. But based on odds, we would say that the MVRVs that are way high up here have a smaller chance of increasing than those that are down here below 0%. So 30-day short term, it looks like there's some upside. Long term, it's going to be limited until the MVRV gets a little bit closer to 0. And one other thing I want to show is the holder distribution, which right now is showing that, as is the case with most assets, the small holder brackets, those with 0 to 0.001, 0.001 to 0.01, etc., you get the idea. All of these holders continue to move up. There are more and more addresses being created with these amounts in them. But the larger ones, like 100,000 to 1 million, it's been getting some volatility here. And we actually saw a pretty big dip right at the turn of the month, August 31st to the 1st or so. Lots of movement where we went from, a high of 119 last month, and now we're at about 112. So there's 7 less whales in this bracket than there were before. However, the largest bracket, the 1 million to 10 million coin, we went from 15 to 16. So one of those 7 likely went up a bracket, but the other 6 went down. It's telling us that the whales are actually dropping down and having less coins than they used to. Now, this can actually be a good thing because it means that the market is becoming more saturated amongst many addresses. So one thing I like to do to validate that is look at our top holders, which you can view here, and we can say amount held by top addresses, percent of total supply. So this is going to default to 10, the top 10, and we don't have it yet. Let me see if we do have anything top holder wise. Otherwise, we'll just have to move on. Top non-exchange addresses, yeah, that's unfortunate, guys. I really wanted to show you the top holders, but maybe we can do that for fetch because I know we have it for fetch. So I'm going to move on there really quick. Okay, so amount held by top addresses, I'm actually going to change this to just the non-exchange addresses because what we want to look for is an upswing, and that's exactly what we have right now. I'm going to get rid of our holders distribution. So just about the last 2 days, we've gone from the amount held by the top 10 addresses on the 5th at 495.2 million. Now it's at 605.05 million. So that's over a 20% increase right here. And it's actually a fantastic sign for an ERC20 that a lot of people still don't pay much attention to, with it being, I think, just outside the top 100. The whales were basically declining for the last 6 months pretty steadily, and it had a pretty big drop off right before the big altcoin drop right around August 31st. So someone was aware that there was going to be a drop happening. And when it did happen, they immediately started accumulating in a huge way. And this is a mass.
Yeah, I think your headphone is out. Yep. Okay. Okay, let me try and take over the screen for just a moment to finish what you were showing. Okay, here we go. Fetch and top holders. Let's look at top 100. Yep. So this is what Brian was showing. A big spike in the top holders for fetch over the last couple of days. Pretty strong. I would need to do some further digging into exactly what this was about. Let's see, in transaction volume, it was probably going to spike a bit as well. Yeah, but the top 100 biggest non-exchange addresses have increased their fetch holdings from 586 million on September 7th to 662 million on September 10th. So that's about 80 million fetch being moved to top 100 whales over the last 3 days alone. Now, in general, this you know is a fairly strong signal of accumulation, buying the dip even perhaps, given the fact that they waited until this point in time to maybe make sure that the market is finally done dumping, yeah, before starting to accumulate once again. So Brian, are you back? I'm hearing some.
I just gave it a
Okay.
quick definition.
Okay, it seems like you're still lagging though, or breaking up. So let me just finish this off. Okay, and then coin supply and exchanges has dropped at the same time, which I would assume is pretty much connected to this spike here. Let me show you. Yeah, see that? Supply and exchanges dropping, supply and big wallets rising. Good, right? If we assume that these top non-exchange addresses are moving there or are buying the dip, and they bought about 80 million 80 million fetch tokens over the last 3 days, it points to a relatively strong confidence in the short and midterm potential of this coin. And if you use that alongside other fundamentals, like the fact that daily active addresses are going crazy for some reason, and the fact that its transaction volume is also relatively high over the past couple of days, it's showing some signs of potential. Now, I'm not exactly sure what this is all about. Yeah, we'll have to check. If you have answers on why this massive spike all of a sudden in both daily active addresses and I assume new addresses. Yeah, look at the amount of new addresses created on the network. It's like at a 1 year high. So there's something. Was this an airdrop or something? Some sort of promotion? There's some reason outside of the price action that a lot of addresses started using fetch over the last couple of days. Um, Brian, did you? I'm already forgetting. Did you look at MVRV for fetch?
I did not. No, I did it
Yeah,
for synthetics, but yeah,
yeah.
we'll look at
Okay.
30-day.
Um, so the 30-day MVRV is still below break even, which is good. The fact remains. Let's see where the bottoms usually were. Yeah, we seem to be at where the bottoms usually were before bounce back. I would like us like if I were here, I would be like, oh, okay, this might be a good time to start accumulating some fetch. It has rebounded a little bit since, so we're about minus 10% for short-term holders now. So we're moving into break-even territory. And then as far as long-term holders are concerned, let's see where they are. They are currently still up on their initial investment, about 8%, plus 8% on their initial investment. So I would ideally like to see this also go a bit further down. But in general, it seems like because fetch is not that old, right? Yeah, it's like a year and a half old. So the 365-day MVRV I think is not as important as the 30-day MVRV in this case because there's just not a whole lot, not enough data to look for. So the fact that we're kind of moving into break-even territory, but not yet, is solid. Like if this is not a fluke and there's an actual legitimate reason why we saw this massive spike in daily active addresses, and we see a reduction in exchange inflow and the spike in top non-exchange addresses, there seem to be some uh, signs of health in the network. Let's look at its social volume. There's also a spike in social volume. So something happened here, man. If you know what, I haven't kept an eye on Fetch over the past couple of days, but there's some reason why we're seeing all of this increased activity both on the network and on social media about fetch. So if this is just a one-off, I would be very careful as using that to make any sort of mid to long-term projections. If it is sustainable, that's a different story. So keep an eye on fetch over the next couple of days and weeks. If the amount of on-chain activity remains high and we see the amount of fetch on exchanges remain low and its MVRV also remain low, it could be an interesting opportunity to maybe look into fetch. Okay, and I think that's gonna do it for us today, guys. We're already about 10 minutes over time. So I wanted to thank all of you that stuck around to the end. Once again, if you like this sort of content and you would like us to make more of it, please click a like on this video. It helps out a lot, and subscribe to the channel. If you can even leave a comment below this video saying how awesome we are, you would be one of my favorite people in the world. So keep that in mind. Finally, if you guys are interested in anything that we talked about today, please check out app.santiment.net. There is a 2-week trial that requires no credit card, so you can use and get access to everything, every single metric and template that we have shown during the stream today. And then afterwards, it's only $49 a month if you take a yearly plan. There's also a 25% off code that you can use called TWIC. I believe Max is going to show it now on the screen as well. So if you use the code TWIC, I will also type it here. During the checkout process, you will also get 25% off on the first billing cycle for the entire Sandbase platform. TWIC stands for This Week in Crypto, which is this call. So anybody that is, sticking around to the end of this video, this is a special code for you guys. Thank you all so much for joining us today. If you want to keep chatting with us, we're gonna move this discussion to our Discord. So the link to our Discord is gonna be in the description of this video. So I'll talk to you then and there. And otherwise, to everybody just tuning into these weekly videos, I will talk to you all in 7 days. Thank you, Brian, once again for sharing some of your insights as well during the call.
Yeah, good stuff, Dino. Thanks for joining, everybody.
Okay. Thank you, guys. Talk to you soon.